Does a recession mean home prices will fall? Stick with us as we look at what history tells us.
Many economists have factored a recession into their forecast this year, but views vary on the timing and the severity. With economic conditions being determined by a range of factors, it can be hard to get your head around. So instead of explaining each one in depth, let's just lean on the professionals and see what history has to tell us about what lies ahead in 2023.
So as Greg McBride, Chief Financial Analyst at Bankrate says, 2 in 3 economists are forecasting a recession in 2023. So as talk of a potential recession increases, you might be wondering what will happen to your housing market. So to find out, we can look back at the previous recessions and see what happened in the real estate sector. This historic data can help you feel more confident about the prospects for a housing market today.
As we said, a recession doesn't mean falling home prices. To prove that, home prices don't always drop during a recession. We can look at the historical data. As the graph indicates, looking back to 1980, home prices actually appreciated in 4 out of the last 6 recessions. So historically, even when the economy takes a dip, it doesn't necessarily mean that home values have to fall as well.
So most people remember the housing crisis in 2008. It's the larger of the 2 red bars in the graph. And they think of another recession, and it would be a repeat of what already happened. However, today's housing market is far from crashing, as the fundamentals are very different from those back in 2008.
As experts suggest, home prices may vary from market to market and may increase or decrease depending on the local area. But according to the average 2023 forecast, prices should net out neutral nationwide, not fall drastically like they did in 2008. Like this chart shows, everyone has equity, so there are very few distressed sales or foreclosures.
So additionally, subprime loans were very popular back in 2008. If you had a pulse, you could get approved for a loan. Now you must be highly qualified to get accepted. Also, we're seeing buyers that are back on the market. Last weekend we had over 70 people at a single open house, which is something we usually see only during the peak summer months.
A recession means falling mortgage rates. Research also helps paint the picture of how a recession could impact the cost of financing a home. As the graph shows, historically each time the economy slowed down, mortgage rates also decreased. Fortune explains mortgage rates typically fall during an economic slowdown. Over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points from the peak seen during the recession to the trough. And in many cases, they continued to fall after the fact, as it takes some time to turn things around when the recession is technically over.
As we're going to show in an upcoming video, many misunderstand and believe that there's a direct correlation between the Fed reserve rates and the mortgage rates. The truth is, mortgage rates respond directly to inflation rates. More about that in the upcoming video.
Now this is due, in fact, that mortgage rates tend to respond to inflation, and early signs show inflation is beginning to slow down. If this trend of easing inflation continues, we can possibly expect a further fall in rates, though 3% mortgage rates are likely a thing of the past. The takeaway here is you don't have to be scared of the word recession when it comes to housing. In fact, analysts suggest that if there were to be a recession, it would be mild, and housing could play an integral part in an expedient economic recovery.
So as the 2022 CEO Outlook from KPMG says, global CEOs see a mild and short recession, yet optimistic about global economy over the next 3-year horizon. More than 8 out of 10 anticipate recession over the next 12 months, with more than half expecting it to be mild and short.
Bottom line, while history may not always repeat itself, it can still provide us invaluable lessons. The data shows that in most recessions, home values have appreciated and mortgage rates have declined. So if you're considering making an investment in buying or selling a house this year, please get in touch and we'll fill you in on the latest developments of the housing market and how this could benefit your personal homeownership goals.
So contact either Doug or I and we'll help you navigate the best options for you in this market.